Chang, and this is Bloomberg Technology. Coming up, adpocalypse seems to have blown over at Google. Alphabet beats big on earnings and revenue. So why did the stock drop after hours? We will discuss. Plus, Masayoshi Son's multi-billion-dollar spending spree could force Uber out of another major market. We'll discuss the SoftBank threat to Uber's valuation and position as an industry leader as rivals look to capitalize on the company's crises. And a Bloomberg scoop, antitrust regulators open talks with execs from Time Warner and AT&T as the $85 billion deal to reset the balance of power in the media industry continues to take shape. First, to our lead. Alphabet shares dipping in after-hours trading. Google's parent company releasing second quarter earnings, which initially sent shares soaring, but then turned south. Revenue for the search giant came in at $26 billion, up 21% year over year, but aggregate cost per click dropped 23% from a year ago. These numbers include the effect of that $2.7 billion fine from the European Competition Commission. I spoke with CFO Ruth Porat about the fine, and she told me, quote, "It is so early in our analysis of this decision. This is an ongoing legal matter, and they haven't decided yet if they will appeal." Joining us now from New York, Colin Colburn, analyst with Forrester, and here on the set with me, our Bloomberg TV editor-at-large, Corey Johnson. I want to start with a look at the Bloomberg so I can show you what happened with shares today, up and then down, Corey. Why did that happen?
Look at that. A look inside your Bloomberg terminal. Very fancy. Really interesting quarter. I think the reason the stock is down is because of traffic acquisition costs. The company has been warning us for some time that as they shift away from ads on a website to ads on a mobile device and ads that are programmatic and ads that are on YouTube, that the cost of, not on YouTube so much, but programmatic ads and mobile ads, right? So for example, when we're on an Apple iPhone and we're seeing ads within an app, those may be served through Apple by Google. Google ad salespeople out there making those sales calls, bringing in those ads, but they're selling them through to Apple. Well, it's more expensive to acquire that traffic, that is to acquire those Apple iPhone users, for example, for Google. So Google's costs for those ads, the traffic acquisition costs, have been rising.
So you think this is more about traffic acquisition costs than cost per click being
than
down?
Anything else? I think that's what it is. I mean, because they've warned this is a big change in their business, that they're going to be more mobile and more programmatic, and that it's going to start to cost more. This time we saw it.
All right, Colin, what's your take? And in speaking with Ruth Porat, she really singled out the strength in mobile search as well as YouTube in terms of driving the momentum here.
Yeah, I think mobile's the big driver here. That's kind of the headline. I think that's why you see increase in clicks and also a decrease in cost in aggregate cost per click. I think that's been the big driver, the big storyline for Google for some time now.
Now, what about what's going on with YouTube? We talked about adpocalypse earlier this year, whereby the Times did a big investigation into extremist content that was shown next to some very prominent advertising. A lot of advertisers pulled their campaigns. It seems like those advertisers have returned. I did ask Ruth Porat about this, and she reiterated that revenue across the sites was strong. That benefited in particular from mobile search and YouTube. We continue to take very seriously this issue, and we are doing all we can to protect the ecosystem. We've already written a lot about it.
Yeah, I mean, look, a lot of advertisers made a lot of noise about this, obviously, but they also liked the advertising that they liked the traffic that overall that Google was giving them in terms of clicks from their ads. I mean, the Google ad is like nothing else in the history of advertising in that you actually can see the result of an ad as it runs. And the advertisers obviously like that because it's where they're shifting their ad dollars to. So to the extent that advertisers actually pulled ads a year ago, 9 months ago, it actually is probably good news for Google now because they've fixed what little problems may have been there. I say little problems, extreme content is a serious problem, but I don't know how big these ad problems really were for these advertisers, and it looks like they're all back. None of them stayed away for good. So I think what's interesting here is that it actually might make the comparison numbers look better for Google going forward.
Now, Colin, there's these ongoing investigations in the EU. We had this big $2.7 billion fine. Google is still trying to decide whether or not they're going to appeal here. How concerned are you about future investigations?
Yeah, I think from an advertiser perspective, there's lots of concerns. Obviously the YouTube scandal earlier in the year, and now the ruling from the EU, from the Competitive Commission, doesn't really help an advertiser's stomach when going to invest in advertising on Google. How do you know that your ad's not going to get placed in a position that you don't want it to be? And how do you know that if you're buying things like product listing ads or the shopping ads, that it's not being skewed against you? So there's obviously some issues, but I kind of agree with Corey that I think this was a good thing for Google. I think in the long run, with advertisers pulling out, and Google's able to identify, what do we have to do going forward? What do we have to work on to kind of instill better trust in our advertising partners?
Now, for so many quarters, Corey, the focus has been on the other bets, these moonshots that Alphabet is also working on. The revenue there is increasing, the losses there going down. This is in part what Ruth Porat was brought in to do, but it's also becoming a smaller part of the overall pie, and I'm wondering if Google is simply going to be less focused on these moonshots going forward.
Two thoughts on that. First is I was struck by the capital intensity of the business has declined significantly in this quarter. That the capital expenditures for other bets was way down this quarter compared to a year ago. I think, top of my head, is down by about 60%.
Right, $855 million last year they spent. Excuse me, that was the loss last year. This year the loss $772 million.
But even more, how much money they're spending to get in that business, the capex expenses, and I think that a lot of that's about pulling back in Google Fiber, which is a very capital-intensive business. That's one thought. But I think what's really interesting is the divergence here. On one hand, Ruth Porat comes in from Morgan Stanley, answers Wall Street's calls, and says, we're going to make this business a lot simpler to understand. We're going to put other bets over here. We're going to put Google over here. We've got Alphabet as a parent company, but you understand we see the Google business, the biggest business. Here's how it works. But they've made Google actually a lot more complicated from a marketer's perspective. There are many more types of advertising going on. There are many more places the ads are going on in terms of both mobile and also programmatic. They've emphasized big growth in YouTube, which is highly under-monetized. They've got user numbers in YouTube that are unbelievable. They've got, I think, 1.4 billion users on YouTube, registered users who are logged in. This isn't just the people watching the stuff on their Twitter feed or just catching a video somewhere. They're actually going through the trouble of logging in and watching it. Those are Facebook-like numbers.
Second only to Facebook.
Those are huge numbers. And so I think they've actually made the business a little more interesting and complicated under the hood in main Google. Right, in the selling of ads and the great number of types of ads that they sell, even as the overall business looks simpler by description.
When it comes to the other bets, Colin, Ruth told me that revenue is being driven mainly by Nest, Fiber, Verily, and the losses are coming down in part because of a pause that they're taking when it comes to Google Fiber. Does the increasing simplicity, as Corey puts it, of the overall business make you more or less excited about the stock as a whole?
I think from a marketing perspective, there's still lots to be excited from Google. Kind of the counterpoint to what Corey was saying is that if I'm an advertiser, I actually have more options now with how I can interact with my end user, with my customer, through whether it's shopping ads or if it's mobile paid search ads or display ads through other places. I think that's actually a good thing from an advertising perspective.
All right. Colin Colburn, analyst at Forrester. Thank you so much. Corey Johnson, our editor at large. We are listening to the call that's beginning now. CFO Ruth Porat saying revenues, quote, demonstrate ongoing momentum in the business. She says ad revenue benefited from strong performance in sites, tremendous performance in mobile, as we were just discussing. We'll be talking a bit more about Google a little bit later in the show and listening into that call. Now, in deal news, WebMD has agreed to sell itself to private equity firm KKR. The deal is valued at about $2.8 billion, with the medical website agreeing to make itself private. That represents a 20% premium to Friday's close. WebMD is used by 75 million consumers a month. Coming up, SoftBank has placed a major bet in the global ride-sharing wars, how its big-time investment has the potential to threaten Uber's drive for global dominance. And Bloomberg Technology is live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg. A stock we are watching, Blue Apron shares jumped as much as 20% after receiving buy ratings from 7 of 11 analysts. The votes of confidence pushed Blue Apron up to its biggest intraday increase since the company went public last month, but still below its IPO price of $10 a share. 5 of the 11 analysts who initiated coverage warned Blue Apron shouldn't be valued at more than that $10 price. Well, Uber is at risk of losing out on another big chunk of the global market. Grab, the leading provider of ride-hailing services in Southeast Asia, announced it's raised $2 billion from Japan's SoftBank and China's Didi Chuxing. The company says it is also expecting another $500 million from new and existing backers. This move is just the latest hurdle for Uber as the startup struggles to right the ship amidst a series of scandals. Joining me now to discuss our Bloomberg Tech senior executive editor, Brad Stone. So, why is this funding round so significant?
Well, the numbers are eye-popping for Southeast Asia. I mean, this is the biggest funding round of any company in Southeast Asia. You know, $6 billion valuation, that is post-money, and it's a $2.5 billion round, but still it's significant. It shows Grab is now a major player in the ride-sharing space on par with companies like Lyft, a similar valuation. And it shows, as you pointed out, Uber's hold on all these markets is somewhat tenuous right now.
Right. We've seen Uber get out of China, get out of Russia. How much pressure does this put on them to get out of Southeast Asia?
Well, I think China and Russia are good benchmarks here. And remember, when they withdrew from those markets, it wasn't necessarily a defeat. I mean, they got out by taking major stakes in Yandex and in Didi in China. They're simplifying their business. They're cutting their losses. It's not all that bad for Uber, particularly at a time of a lot of management turmoil.
What about in other markets, though? I mean, potentially Brazil, potentially India.
Right. I don't think they want to sacrifice the whole chessboard. India is one place where, they have significant competition with Ola, but I think they're going to still try to make a major play there. Europe, most of South America, Uber's very strong. So, they can streamline their business in a way, and it's not necessarily a defeat. But we've come a long way from that early sentiment that maybe this could be a globe-spanning platform. Clearly, it's not.
And SoftBank's also put money behind the Brazilian competitor to Uber, the Indian competitor to Uber, Ola. What do you make of SoftBank being the force that is supporting this anti-Uber alliance?
Yeah, well, Masayoshi-san obviously has a lot of conviction in this category, not only in the potential in terms of transportation, but also the potential in terms of just payments, and this being a major facilitator of online payments. Now, my colleague Eric Newcomer has reported that SoftBank may also be interested in taking a stake in Uber, right, via buying some shares from investors like Benchmark and maybe also investing some more money into Uber. SoftBank has denied that publicly, but we think there's still something to it. So watch this evolve. We could have a sort of global peace treaty where all these companies take an ownership stake in each other, and we reduce the level of destructive competition and discounting that is causing them to lose money.
Well, and another way to look at that, SoftBank potentially taking shares of Uber is because investors seem to want to unload Uber stock. Is that just because they want to cash out, or because they're losing faith in the company?
I think it's probably the former. I think that the early investors, it's now been 10 years. They are, very impatient, as we know from listening to Bill Gurley over the years, impatient for an IPO, which may or may not come next year. Despite the management turmoil, the company Uber has continued to perform quite well. So while there might be, a little bit of anxiety, I think people are still pretty bullish on this category.
And is it performing well because it's made you sort of raised the white flag in some of these markets? I mean, is it better for Uber to walk away from them? Or do they lose something big by not having a stronghold in some of these other geographies?
Well, I mean, what we see is that in some of these markets like Singapore, the market's growing very fast. Nobody's profitable because you have Grab versus Uber discounting the heck out of all these rides and losing money. So the idea, really pioneered in China with the Didi Uber peace treaty, is reduce some of the competition, get rid of the discounting, allow prices to go back up a little bit, and then you return to what's a natural profitability in the business. I think Uber wants to get there in more markets.
I ask Eric Newcomer this every day he comes on the show, so I'm going to ask you, any updates on the Uber CEO process? I mean, do we know how long this is going to take?
I have not heard anything, and I've been asking as well, and of course, listening wherever I can. They don't seem to be in a particular rush. They've got a committee of executives, of leaders inside Uber, and I think they're waiting for the right candidate. Would I be surprised if we hear about it tomorrow? Maybe not, because I think they do need to fill that spot. But I think it's going to be another couple of weeks, if not months.
All right, Brad Stone, our senior executive editor for tech. Thanks so much for stopping by. Coming up, as the White House mounts its defense against accusation of Russian ties, it is also pushing forward a massive healthcare legislation. We will break down the latest in Washington next. This is Bloomberg. It was another busy day in Washington. President Trump's son-in-law and White House advisor Jared Kushner appeared on Capitol Hill today, talking to the Senate Select Committee on Intelligence in closed session about his contacts with Russians during the presidential campaign. After the meeting, Kushner denied any collusion.
Nor do I know of anyone else in the campaign who did so. I had no improper contacts. I have not relied on Russian funds for my businesses. And I have been fully transparent in providing all requested information.
At the same time, the White House is also trying to pass a health care overhaul. President Trump turned up the pressure on Republican lawmakers on Twitter, and in a speech this afternoon, he said the Senate will vote on a procedural vote Tuesday.
The Senate is very close to the votes it needs to pass a replacement. The problem is we have zero help from the Democrats. They're obstructionists. That's all they are. That's all they're good at, is obstruction.
Before this speech, the president made a series of tweets where he said Republicans have a last chance to do the right thing on repeal and replace after years of talking and campaigning about it. If Republicans don't repeal and replace the disastrous Obamacare, the repercussions will be far greater than any of them understand. It is very sad that Republicans, even some that were carried over the line on my back, do very little to protect their president. So President Trump trying to throw around his weight, use a little more muscle to get what he wants when it comes to that health care bill. We're also still watching headlines from the Alphabet earnings call. CFO Ruth Porat speaking there moments ago, saying there's, quote, strong momentum in the second quarter due to growth in mobile search and YouTube. So far, Alphabet stock in late U.S. trading not reacting well to the earnings report, falling 3%. We'll be keeping an eye on this call throughout the hour, checking back in. We're also going to have a little more depth on Google coming up. Those are the tech movers of the day. We are back now with Kevin Whitelaw, our Bloomberg News head of congressional coverage, to talk about the goings-on in Washington. Kevin, I want to start with what's going on with health care. What do you make of the president's speech today and the likelihood that Republicans are going to heed, essentially, what he had to say?
Well, we'll see. I mean, it's coming right down to the wire. Republican leaders are still insisting they're planning to go ahead with a vote tomorrow to start debating the health care bill, but a lot of senators still don't know exactly what the plan is and what the series of votes is going to be and which bill is the one they're intending to try to put forward. There's an option to do a repeal-only bill that would be a delayed repeal. They've obviously also been talking about a version of a replacement bill released by and revised several times by Majority Leader Mitch McConnell. That's still a work in progress. So it's a unusually fluid situation for a Senate that's more usually seen as much more of a deliberative body than this.
So what do you make, Kevin, of Jared Kushner's appearance today on the Hill, him confirming 4 contacts with the Russians during the campaign and after the election and calling these contacts unmemorable?
Well, this is sort of the beginning of what is likely to be a somewhat long process of public statements, not just from Jared Kushner, but from other members of both the Trump administration and those associated with the campaign. Kushner is going to be back on the Hill tomorrow morning, meeting behind closed doors with the House Intelligence Committee, where staffers and we expect members will get a chance to ask him some questions. And then there also might well be, one would expect, public appearances down the line. A number of Democrats and some Republicans have said they do want to see Kushner show up in public to answer questions in front of everybody. So that's one thing. And then we still have other hearings out there in the potential future. Senate Judiciary has made it clear that it wants to hear from Donald Trump Jr. and former Trump campaign manager Paul Manafort at some point, originally scheduled possibly for Wednesday. That'll likely happen at a later date now, but there's going to be a lot of these kinds of appearances coming up in the coming weeks and perhaps months.
There's also been a lot of controversy swirling around ideas of things that could happen, whether it's President Trump pardoning himself or firing Bob Mueller. Obviously the president has shown himself to be fairly unpredictable, but when could we see a sort of step in a direction?
Well, I mean, at this point, who knows? Obviously, we know that that President Trump does tweet a lot. He's sort of an impulsive tweeter, and I believe he debates things amongst his staff that way, too. As to what action we're going to see, I don't know, but it's very clear that, at least from the congressional side, there's a lot of Republicans who are eyeing this with a fair amount of nervousness. A lot of them were very happy with the choice of Bob Mueller. That was sort of someone who has a lot of respect from both sides of the aisle. And I think there's also a certain amount of nervousness about what might happen about Jeff Sessions giving some of the tweets that we've seen Trump give about the Attorney General.
All right. Well, I know you're continuing to follow all of that for us. Kevin Whitelaw with Bloomberg News. Thanks so much for that update. Coming up, U.S. antitrust officials have started talks with AT&T and Time Warner about approval conditions. We will discuss. This is Bloomberg.
I'm Elisa Parenti in Washington, and you're watching Bloomberg Technology. Let's start with a check of your first word news. UK Trade Secretary Liam Fox says exiting the bloc does not mean the end of economic ties between Britain and the European Union. Fox spoke in Washington today to begin preliminary talks for a post-Brexit trade deal with the U.S.
This will not come at the expense of our European partners. Britain wants the EU to succeed. There will be no closing off of relations, economic or otherwise, and no abdication of our responsibilities.
Poland's prime minister is criticizing President Duda for his decision to veto 2 judicial bills introduced by the governing party. The EU had threatened sanctions over the issue. Duda said the proposed changes gave too many politicians too much power over the judiciary. A UN envoy sees little chance that failed talks to reunify Cyprus will restart anytime soon. That is after meetings with the leaders of the Greek Cypriot and Turkish Cypriot communities. A key sticking point, a disagreement about the 35,000 Turkish troops stationed in Cyprus since 1974. Turkey's President Recep Erdogan is urging an end to the crisis between Qatar and its Arab neighbors. Erdogan wrapped up a 2-day Gulf tour in Qatar where he voiced support for mediation efforts led by Kuwait. Qatar says it is open to dialogue as long as its sovereignty is respected. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. Monday here in Washington, 7:30 now Tuesday morning in Sydney. We are joined by Bloomberg's Paul Allen. He's got a look at the markets. Good morning, Paul.
Good morning, Elisa. We're set up for a positive start to Tuesday here in Australia. Futures pointing up about 0.25%. A couple of stocks to keep an eye on are Oz Minerals, the copper and gold producer, up with second quarter production numbers, and Rio Tinto under investigation by the UK Serious Fraud Office for alleged corruption in Guinea for one of its iron ore projects a few years back. Nikkei futures are looking mixed. Keep an eye on Mitsubishi Motors and Shimano, both releasing earnings today. And of course, the Bank of Japan minutes are going to be out. Last week, of course, the BOJ, staying dovish, reiterated its commitment to monetary stimulus and emphasized those downside risks for activity and inflation as well. In South Korea, we're going to be watching. The government there going to be releasing its economic plan for the next 5 years. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
This is Bloomberg Technology. I'm Emily Chang. Our top story this hour, Alphabet second quarter earnings report. Shares are still down. The search giant's ad model is shifting to a mobile dominant space. Also hammering down profit was the record $2.7 billion antitrust fine from the European Union. But wasn't all bad news. Take a listen to Ruth Porat, the CFO of Alphabet, on the investor call.
In terms of the revenue detail, Google Sites revenues were $18.4 billion in the quarter, up 20% year over year. The biggest contributors to growth again this quarter were mobile search and YouTube.
Joining me now, our Bloomberg Intelligence senior analyst, Jitendra Rawal, and we're taking a look at what shares are doing after hours here on the Bloomberg. And you can see the spike and then the plunge. What's going on?
So if you look at the underlying demand through paid click change and things like that, 52% growth, strongest since 2007. The demand is strong, but the traffic acquisition cost spiked. So because they're making more money from mobile and programmatic advertising, the traffic acquisition cost is higher on those platforms. And that's why the net revenue sort of came in line with the estimates or missed most of the bullish estimates. And that's why you saw the sort of reaction that you see.
We've also been talking about what's going on with other bets becoming an smaller piece of the pie overall, and in part this is what Ruth Porat was brought in to do. Losses are narrowing, revenue is increasing. They've taken a pause on fiber. Take a listen to what Ruth Porat had to say moments ago about those other bets.
We're pleased with our progress across other bets. A couple of updates. Nest continues to drive ongoing product expansion, such as our recent introduction of the indoor security camera, Nest Cam IQ, as well as geographic expansion, both of which support its position as the leading brand in the connected home.
When I spoke with her on a phone call before this earnings call, she said that Nest and Fiber, even though they're taking a bit of a pause there, as well as Verily, are really driving the revenue, but it seems like it's taking a back seat to the overall Google business.
Yeah, the actual meaningful revenue contribution is still a couple of years away, and that's why they classified that in other bets. What's interesting is the cost control that we're seeing over there. So there's more focus sort of coming to other bets, if you may, which is sort of helping the core Alphabet Group's bottom line. But don't expect revenue growth to accelerate meaningfully from the other bets anytime soon. Where you'll see acceleration is the Google other revenues, which is the cloud services, which is part of that. And that's where they are doubling down.
Cloud, obviously, a huge opportunity for them. A lot of competition with Amazon and Microsoft, but an area where they are investing. They also named Sundar Pichai, the CEO of Google, to the board. And it's interesting because he's now the 5th Alphabet employee on the board. On the one hand, it smooths out this strange reporting structure where Diane Greene was on the board of Google, and then she was reporting to Sundar through her work on the cloud. But there are some questions about whether that's just too many people from one company on a board. If you look at Facebook, it's just Mark and Sheryl. If you look at Amazon, it's just Jeff Bezos. What's your take?
See, over the last 2 years, I mean, Sundar Pichai has clearly shown re-acceleration in revenue growth, and more importantly, a focus coming to the Google side of things. When it comes to machine learning and AI, it's literally betting the farm with respect to infusing these technologies with every segment of Google. Now, this allows them to apply that to core Alphabet Group. So there's more focus coming to Alphabet Group because of this. There will be concerns about, too much control from management and things like that, but as we have seen in the light of results that have been working, especially with the focus, I think it'll help in the long run.
All right, Jitendra Rawal, our Bloomberg Intelligence analyst, thanks so much for breaking it down. We're continuing to listen to that call, and we'll bring you any headlines as we have them. Now, to a Bloomberg scoop, AT&T and Time Warner are said to be in early talks with U.S. antitrust officials for approval conditions. Competitors and lawmakers have been pressuring the Justice Department to stop the $85 billion deal. Fears that the deal may lead to higher prices and fewer choices for consumers involved. Another possible challenge, the Justice Department is without new antitrust chief Macon Del Rahim, who awaits Senate confirmation. Joining us now from New York, Bloomberg's Jerry Smith. Jerry was one of the authors of this scoop. So, Jerry, what do we know? What is the latest?
Well, the latest is that AT&T and Time Warner are in talks with the Justice Department about how this deal could go through with conditions. So, that's an encouraging sign, because certainly there's been questions for a while about whether the Justice Department might try to block the deal. Certainly President Trump has, criticized CNN, which is owned by Time Warner, and had said during the campaign that he might try to block the deal. But what we know now is that the two companies are in talks with Justice Department lawyers about the deal going through, and then having certain conditions that they have to follow after the deal goes through.
So talk to us about other television channel owners and what they're concerned about.
Well, for example, premium channel owners, these would be rivals to HBO, companies like Showtime and Starz. They're very concerned that AT&T could use HBO, basically favor HBO over, because HBO is owned by Time Warner and AT&T would be acquiring Time Warner. They would favor HBO over their channel. So what they're asking Justice Department lawyers is for some conditions that really protect them and make sure that they get the same kind of marketing, the same sort of packaging, equal footing on online distribution that HBO is getting once it's part of AT&T.
So if the deal goes through, what kind of conditions might we see imposed on AT&T?
Right. I mean, that would be one of the conditions that might be imposed, is that AT&T would have to, treat HBO's rivals the same way that it treats HBO. I mean, one thing that's been an issue and that's being looked at is this idea of what's called zero rating, which means if you're an AT&T wireless subscriber, there's the potential that streaming HBO might not count towards your monthly data, whereas other channels, it would count towards your data. And that's something that HBO's rivals are concerned about, and that Justice Department lawyers are looking at as well.
All right, Jerry Smith, our Bloomberg media reporter there. Thanks so much for joining us. We'll keep watching. Well, in today's revolving door, Bleacher Report is putting a former Condé Nast executive in charge of its plan to siphon off more ad revenue from online giants like Facebook. The company named Howard Mittman as its first chief marketing officer and chief revenue officer. Bleacher Report is part of Time Warner's Turner unit, which owns cable networks TNT and TBS. The goal is to position Bleacher Report as a viable alternative to Facebook and Google for marketers looking to reach young audiences. Mittman will work on new advertising opportunities for brands like AT&T, Gatorade, and Ford Motors starting on August 14th. Coming up, competition in the augmented reality space showing signs of heating up. How UK-based Blipbar plans to carve out its space in what's become a very trendy field. That is next. This is Bloomberg. A report we are watching, Comscore out with its monthly internet user data for 2017 June. Snapchat's U.S. app visits reached an all-time high of almost 90 million, while Pinterest continues to stall since August, highlighting the risk it may struggle to broaden its appeal beyond women to sustain user growth. Other sites like Amazon, Pandora, and Facebook continue to see visitor growth challenges in June. Growing YouTube use and mobile app adoption are boosting the time spent with Google Apps. Well, phone-based augmented reality is on track to become a major trend in coming years, with tech titans like Apple and Google joining in on the fun, launching their own new AR platforms. But it's not just major tech giants that are making a play for the field. We're now going to send it to Bloomberg's Caroline Hyde in London, who recently spoke with a longtime player in augmented reality. Caroline, what do you got? Yeah, Emily, thank you. Yes, the long-time player, it's none other than the AR and computer vision company known as Blipper. Now, Blipper is one of Europe's so-called unicorns. It's therefore got a reported valuation in excess of $1 billion. It's got offices here in London. It's got them over with you in Silicon Valley. And the company is known for its visual discovery app, which boasts 65 million registered users, though its active user base might be a bit smaller than that. It most recently launched a facial recognition feature for its app, which claims to have, get this, more than 99% accuracy. It can already recognize 370,000 public figures. I recently caught up with Blipper COO. He's Danny Lopez, right here in London. I started by asking about the business applications for the latest feature. Take a listen.
So the facial recognition within our app, we've launched in beta. So it's fun, it's social, we want people to play around with it, we want to learn from the experience. The key for us is the accuracy of the recognition. So our facial recognition has a 99.67% accuracy rate, and that's what we want to make sure is working, and it's working extremely well. Because once you have that, you can take that from our app and use it in a whole host of sectors. So think mobile banking with identity management and facial recognition as a way to be able to transact. Think building access, where, gone are the times where you're sort of faffing around to find your card, but actually there's a camera lens that recognizes you as an employee. So many different smart networking, the conferences we go to with 5,000-10,000 people, trying to figure out who's who might be relevant to you, having the ability to be able to just scan a photograph from a brochure or in person and getting that information is extremely exciting.
Security. Are there issues or worries about that as well? I mean, in terms of being able to just scan a picture of anyone and know the details about them. At the moment it's opt-in, but how does that scale?
I mean, security is a key area, not something that we are working on right now, but I think like everything, you've got to embrace the technology. So at the end of the day, if you acknowledge that facial recognition gives you the ability to find where the bad guys are, that's a very positive development. People talk a lot about privacy issues, but think about the person who's in a foreign city, who faints, falls down, has nothing on them. The ability for somebody else to come and, through facial recognition, be able to find nationality, send that person to the closest embassy, next of kin, or maybe some medical information, that saves lives. So there's a real debate about privacy, but there's also so much value add this can bring.
So what is Blipper now? Because when it first launched 5 years ago, it was very much about branding and about exciting ways of using it and brands getting access to you and I. What do you want to stand for now?
So we're a technology company that specializes in augmented reality and computer vision. So a lot of people think of us as Blipper, the app. The app, in a way, is the showcase of the technology. So we've made a very clear decision that to be able to scale, as I was saying earlier, AR, you need to be very good at computer vision. So we think that when you have that perfect marriage between augmented reality, i.e. overlaying digital content onto something, with computer vision, i.e. true recognition and cognition, you have, as I say, perfect marriage that will allow AR to scale. So we're both, and we essentially provide people the ability to get more from the world in front of them. That happens within our app, but then the technology that we've built can be taken outside our app and used by companies in other sectors to be able to capitalize on the great progress that we've made on computer vision.
You said, of course, you've been investing heavily. What does that mean in terms of money? Are you looking towards profitability or break even? How do you start to make sure that you can make this a revenue driver as well?
Yeah, I mean, look, first of all, we already generate significant revenue from the brands that we work with. But we take a long-term view here, which is that we're building something pretty ambitious. We're cataloging, we are indexing the entire world. And to do that, you need the best engineers in the field. We've got a lot of those here in London. We've got a lot of those over in the West Coast, in the US. So of course, fundamentally, we want to become a profitable company in the future, but we take a long-term view and think that it's important, as so many technology companies, to be able to spend money to then be able to have technology you're proud of, and of course, along the way, meeting significant tech milestones. Have you
got a need to be fundraising anytime soon? Will we see you going to investor base? How have investors reacted thus far?
So we've raised just over $100 million over the last 5 years. years. We have incredibly supportive shareholders who are very comfortable with the progress we're making, both from a commercial standpoint and, as I said earlier, the tech milestones. We're a private company. Who's to say what happens in the future? But right now, feeling good about where we're going.
So you're not going to have to go to your private investors anytime soon. There's talk in the press of burning through cash, etc.
Yeah.
But it sounds like a heavily investing area that you're in.
Look, I think fundamentally it's always about, is your board comfortable with what you're spending the money on? Is your board comfortable with the progress that you're making from a tech standpoint? If the answer to those two questions is a big yes, then that's exactly where we want to be.
And what about the road to exit? Are you an IPO-driven company? Are you a M&A-driven company? What do you think?
All of the various options you've mentioned, and I'm sure a few more, are all on the horizon. Look, it's a very exciting time for the space because you've been, since 2011, you've had people say, is next year the year when AR becomes mainstream? And this has happened, as you know very well, as I say, since 2011. This is the year when people are starting to take that statement far more seriously because a lot of the big players, take Facebook, take Apple, take Google, they've either said that AR is here and is happening now, or they've said that they're investing heavily in computer vision. Both of those are areas that we've been working on for 5.5 years now, and it gives you an inkling that the next 12, 18 months will be absolutely crucial for the space. Nobody has the answers. And I think that's the key here. It's not like any of the big players or ourselves can map out what's going to happen in the next 12 months. It's just going to be very exciting to follow every single step.
An optimistic Blipper COO Danny Lopez there, Emily. All right, thanks so much, Caroline Hyde, for us there in London. Next, we turn our attention to Southeast Asia and India. Alibaba and Amazon both said to be pouring millions of dollars into these regions. We will discuss the tech giants' latest negotiations. And we continue to monitor the Alphabet conference call after the tech giant reports second quarter earnings. CEO Sundar Pichai commenting on its growing cloud business, saying in serving cloud customers, the company is reliable. They're continuing to hire and scale as quickly as they can. Shares still down about 3% in after-hours trading. This is Bloomberg. Alibaba is said to be in negotiations to lead a funding round in Indonesia's largest online marketplace, Tokopedia. It's part of Alibaba's push into Southeast Asia's largest economy. Joining me now from New York, Bloomberg's Selena Wang, who's been following this story. So talk to us, Selena, about the strategy behind this potential investment.
So Alibaba has been incredibly aggressive in Southeast Asia. We know that they want to penetrate this market and dominate this area while there's still green space and there's no clear winner here. Tokopedia is a big e-commerce startup in Indonesia. Now, Alibaba already has an investment in Lazada. They recently upped their stake by another $1 billion to really have full control almost of this Singapore-based company. So Tokopedia is really just a natural extension of them wanting to dominate this space.
So what does this mean for Alibaba's competitor, JD, which had been in talks to buy Tokopedia?
This is definitely a big blow to JD. Alibaba is the much larger competitor, and Alibaba has much more cash and much more impetus to win over Tokopedia with probably more money, a higher valuation. Sources didn't say the exact amount JD was looking to invest, but it was also in the hundreds of millions of dollars of range. I think in some ways it does make more sense for Alibaba because Tokopedia's business model is more similar to Alibaba's in that it matches buyers and sellers rather than selling goods from its own shelves, whereas JD has tended to own the entire chain from having their warehouses and delivering it to the customer.
Staying on that side of the globe, meantime, in India, Amazon making a bid for the Indian payments business FreeCharge. Tell us what's behind this.
Nothing is going to stop Bezos and for him to win over India, another enormous market with more than 1 billion people. He needs to have a strong digital payment system to make the payments process for e-commerce as easy as possible. And he has big ambitions in both e-commerce in the country as well as in the payments area. And the local competitors, PayTM, one of them, they have their own very large payment service, and Amazon needs that as well, and FreeCharge is a good extension of that.
So what does this mean for local Amazon competitors in India?
So Amazon would be potentially buying this from Snapdeal, which is actually a struggling smaller competitor there. Now, I think this means for the smaller local competitors that they really need to up their game. Now, in the midst of this potential acquisition, Snapdeal and Flipkart, the larger local competitor, are in talks for a merger. Now, this merger would mean that there would be a stronger domestic behemoth to compete with Amazon and Jeff Bezos. Jeff Bezos has said that he wants to invest $5 billion in India, so nothing is going to stop him. And with free charge, he's now going to have better brand recognition, another channel to acquire new users. So this is definitely something for local competitors to keep an eye out on.
All right, Selena Wang covering happenings on the other side of the globe. Selena, as always, thanks so much for joining us. That does it for this edition of Bloomberg Technology. We are live streaming on Twitter. Check us out at Bloomberg Tech TV, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg. I'm Emily Chang in San Francisco with a look at the top tech headlines. Google's parent company Alphabet reported second quarter revenue that met analyst projections but fell short of most optimistic estimates. The company said the cost of its Google ads declined. Alphabet's profit was also affected by a record antitrust fine from the European Union. In deal news, WebMD has agreed to sell itself to private equity firm KKR. The deal is valued